Hello everyone, Clifford Bennett, Chief Economist, ACY Securities, and we have the not too good news but fully expected and forecast here. The RBA has raised interest rates by 25 points to 4.1%. What does all this mean? Well, the obvious takeaway to the home is that the mortgage is far more expensive. In fact, on a $1 million mortgage, we're now looking at an increase of around $2,268, something like that, since interest rate hikes began. So that's a very quick change in terms of the monthly cash flow for a lot of individuals, couples, young couples and families. It'll be particularly hard, I would think, for young couples who perhaps both working, went halves, $500,000 each in a $1 million mortgage to get a decent home because prices are pretty high in Australia these days. And now all of a sudden, after tax, they're down sort of nearly $2270 per month, roughly, and that's after tax. So it's a big chunk of income that people are now having to fork out for this shift. Mind you, the shift to a degree is warranted because interest rates, and people often forget this, interest rates were at crisis levels. And of course, it can't remain at near zero. Interest rates can't remain at near zero when inflation is taking off like a jet plane and continues to do so. And we've got it right. Can I just say, I'm going to put my hand up and say that most probably ACY has been the most accurate forecaster of the Reserve Bank interest rate movements in Australia since before this interest rate hiking cycle began. And that's something for us all at ACY to be proud of. In fact, I originally forecast that the RBA could raise rates as high as 4.5% to 5.5%. And I've been on television panels where some of the major banks were just thinking that was a ridiculous call, but those same major banks are just now forecasting the same kind of numbers. It's funny how major bank forecasts and reality tend to converge. I prefer to make a big call, and if I get it wrong, I apologize and figure out why I got it wrong and try to do better next time. Whereas a lot of other institutions, they just seem to be constantly changing their forecast towards where the market is or whatever's happening without ever really doing a mea culpa. Anyway, that's our little triumph for this interest rate hiking cycle at ACY. So where do we think it goes from here? Well, I still, of course, have that 4.5% to 5.5% range for the end terminal rate, if you like, for this round of Reserve Bank interest rate hikes. It will be very difficult for the Reserve Bank to begin cutting from those levels, even as the economy slows. And this is the diabolical nature of the predicament that Australia now finds itself in due to the RBA mismanaging the initial takeoff of inflation, mismanaging the original economic post-COVID boom and refusing to raise interest rates when everyone all around the country, everyone was saying, why are interest rates still near zero? Wow, happy days, but didn't want to complain too much. It was obvious to the whole nation, but it wasn't obvious to the Reserve Bank governor. And so that's why we've had runaway inflation. Yes, some of it's been driven from overseas, and yes, some of it's been driven by profiteering, and I do mean that, profiteering by small, medium and large businesses on the back of the COVID dislocation. It was a hardship for them, but then there was a degree of profiteering, and that is, by that I mean widening profit margins to avoid any further risk to a degree that has greatly increased earnings in the short term, but in the long term has created inflation, and in the long term will create an economic slowdown. The previous government obviously played a role with giving Australians the largest per capita COVID stimulus in the world, completely unnecessary, completely unwarranted, and that combined with an RBA that only wanted to win the popularity stakes by, allowing property prices to take off and providing near zero interest rates for an extended period of time, even as inflation took hold. That's all added to the roller coaster economy we are now in. I want to stress that we are in a roller coaster economy because where we are now is on the way down. And we all know we're on the way down, but I don't think people realize how deep this roller coaster plummets. It could be one of those that actually splashes beneath the water. So a recession, given the RBA is still hiking rates, still using a 1960s, 1980s playbook to address contemporary economic challenges. I'm sorry, I'm trying to control myself from bursting out laughing here, that our nation can only offer up an institution as our central bank of this quality is incredibly embarrassing. Hopefully the moves by the review do move us forward. Let there be no doubt, and as someone who's worked overseas a lot, traveled overseas a lot, met at very senior levels overseas, the Reserve Bank is the laughingstock of the world overseas, but of course they're polite and they don't say it too loudly, though the OECD did issue an unusual urgent request for a review of the RBA and its board some 2-3 years ago now. So that was a pretty loud hailer, but of course our then Treasurer didn't do anything about it. Am I getting off the track? Not really, because all of these things have led into what is happening now. And this is why all of that stimulus, those record low interest rates, allowed inflation to take off and sucked and created an artificial economic boom coming out of COVID. And remember, I called it that in real time. There's no hindsighting here from this economist. And I said what we're going to do is the RBA is going to make two big decisions, two big errors, mistakes. First mistake is going to leave rates too low for too long. The second mistake it's going to make is to chase inflation and hike rates too aggressively when it really won't have much impact on the nature, the different animal that inflation is in this century to what it was previously. But as I alluded to, the RBA is still playing from the old 1960s, 1980s textbook, which is if there's inflation, hike interest rates. The thing is, the interest rate hikes that are occurring now are not really going to stop inflation. The only thing they're going to stop is the economy, and it may need resuscitation from a specialist paramedic crew at some stage, but just who that specialist paramedic crew might be that could resuscitate this patient, I'm not too sure. The Australian economy is headed down, people. I'm trying to be cool using the word people. The Australian economy is headed down. Just don't have any doubts about that, okay? And the RBA absolutely ensuring we have a recession. This is a very strong probability forecast. I really do think that is the case. The bizarre thing is that as Australia heads ever faster toward recession, interest rates will be going up and the Australian dollar could be appreciating, which will do damage to our export sector. So our exports and our domestic economy could suffer at the same time. See, what got us through the GFC was China managing their economy well and maintaining export growth of around 16% through that period. And also the Australian dollar collapsed, and that saved us as well. But if we have the Reserve Bank hiking interest rates, we're going to have a firm Australian dollar, much firmer than would usually be the case in a recession. And therefore, both exports and the domestic economy could be both slowing at the same time over the next 6 or 12 months. And this is why the recession could be deeper than most people currently anticipate. Overall, the old world approach of our old central bank called the Reserve Bank, I often refer to it as the reverse Bank of Australia, is most certainly going to create a situation, slowing economy, higher interest rates, higher Australian dollar, weaker equities. In fact, the equity market, because the US market's a little bit iffy at the moment, it's a technical term, highly technical term, you can look that up on Wikipedia, iffy. The US stock market is a little bit iffy at the moment, and if it rolls over, the Australian market will just lose anything to hold on to now. So the thing that can hold the Australian stock market up is if the US market does well, but the domestic economic situation and even the external economic situation for Australia with an appreciating currency is not it doesn't really quite work out as a hopeful economic scenario. So be careful about the Australian economy and be careful about those property prices that have had a 1 or 2 or 3 month bounce, very small bounces from very sharp falls, that perhaps there could be another downwave. So just be very cautious on all that, and I still think it's appropriate to play defense with your investment portfolio, and all of the instruments are available there to do so. Have a good day. I hope I've helped. It's not cheery news, but it may be helpful news. All the best, Clifford Bennett, Chief Economist, ACY Securities.